Good morning, everybody. Welcome to the Flow Show. Just bear with me because I'm not sure everything's running as it should be. There we go. It seems to be running okay now. Let me double check. Yep, sorry, everything's running all right. Just one of our players wasn't showing up, so that's all running now. Anyway, welcome to the Flow Show again. Friday, 2nd of May, NFP Day, the big one everyone's been waiting for, the biggest jobs report ever in the history of jobs reports since the next one and the last one and the one before and the one after. Morning, Kay. Dr. Loaded.
Good morning, Ryan. Yeah, the biggest one ever on the 2nd of May 2025. I mean, the 3rd of May, 4th of May, there's the next biggest ever coming up. But yeah, today I reckon it should be very interesting. That is, I'm usually trying to keep expectations subdued. But I think today could be a big one, especially, of course, if we get a negative one, which the bears or the market is now kind of expecting. But if we get one, there may be some really decent moves coming.
Yeah, and it make a change to have a decent NFP that moves markets because they've been a bit
Yeah.
dull of late, shall we say. So, yeah, nice to have a bit of spice going into this one.
Yeah. And again, the options market is not really expecting big waves, and has to. We have to admit that, barring maybe one or two occasions over the past many months, perhaps even years, they have been spot on all the time.
Yeah, yeah. But today might be different. Let's hope so anyway. Before we crack on, just want to bring you up to speed and just remind you we've got this discount going on to join the Forex Analytics platform, 40% off. That is running out very, very soon. And today's a good day to get on board, get in the chat room, get in our community, see what's going on, bounce some ideas around, ask questions if you're not sure about stuff that's going on with trading and everything else. This is the place to be. Right, let's crack on then. Going to start in Japan. We've had these meetings, these US-Japan meetings going on. Japan Economy Minister Akazawa, he's leading all the negotiations on the Japanese side, but says there's no comment on specific negotiations, and they're aiming for another meeting after mid-May. So nothing doing out of this round of talks anyway, more just Japan laying its case out what it wants to see, and that's as far as it's gone. Finance Minister Kato, though, is talking tough. He says that Japan's US Treasury holdings are a card in trade negotiations. Says, though, that whether Japan will use that card is a different decision. Quite a strong comment from Japan, Kay, considering they've been playing nicely and always play nicely with the US.
Yeah. It does show that they are feeling that they are in a position of strength, and let's face it, quite rightly so, because they are the biggest foreign investor in the US assets, financial assets at least, trying to buy themselves or build more as well in the US. So I think they are quite rightly saying that the US shouldn't be deciding all the about all the relationship on their own, and just expect Japan to politely kneel in front of the king.
Yeah, no rolling over there. Right, we're going to look at a bit of data. I'm not even set up. There we go. That's how much I'm ready. And I am set up. There we go. Happy days. Starting off in down underland. We've got retail sales slightly missing expectations month on month, coming in at 0.4%. PPI data as well, slightly hotter on the quarter, up 0.9%, unchanged 3.7% year on year. So a little bit of data for Aussie, nothing for the RBA to get excited about. We got the some forward or first and some final manufacturing PMIs out from Europe and the likes today. We had Spain coming out, going back into or further into contraction. 48.1 were expected to just poke their nose above the 50 line, or the expansion line, shall we say. Swiss numbers there looking shoddy as well. But then we got an improvement in Italy, 49.3, better than last month and expected. France, also that ticked up 48.7 versus 48.5 previously. These are final numbers. Germany saw an improvement as well over the flash at 48.4. So they actually managed to gain a pip over last month where it was down. But all these numbers still in contraction. So no pain, no gain there. Eurozone as well, 49, just reflecting the pan-Euro number, reflecting what was happening in the state numbers too. And then we got CPI data, flash CPI data from Europe, and some victory lappers will have to stay in their starting blocks this month. Inflation headline was expected to drop a pip to 2.1%. It stayed unchanged. The core was expected up a pip. It jumped 3 pips to 2.7%. So that inflation target still within touching distance, Kay, but not quite there yet. And unless this trade stuff gets sorted, there's probably only one way for inflation, isn't there?
Yes, although if you're an exporter and you export less, it's for as long as the trade shenanigans are ongoing for the exporter country or the country with the positive balance, it may be actually not that inflationary, but yeah, I mean, we're still in that in that scenario. I think that trade shenanigans are, for as long as we're talking about huge tariffs, are still inflationary. Where the balance may completely shift is that if we go into an all-in trade war, global trade will drop off very sharply, and that in a second or third wave may actually be disinflationary. But let's keep it very simple for now, and because we are not yet in that scenario, and yeah, just keep the simple rule that for as long as it's they're getting slapped around, it's still a bit inflationary.
Yeah, and I mean, I think this is all short-term stuff anyway. This inflation stuff just coming about because I think the lack of activity in Europe is deflationary in itself.
Yeah.
We're seeing in the PMIs, the reason why output prices and some other prices are going down is because people are discounting to get business in, and that's not an inflationary environment. So yeah, I think this is likely
Transitory. Say the word.
No, I won't. I refuse to do so. No, not going now. But yeah, it is likely temporary. But we shall see. Depends how everything drags on, as we've been saying for a while. Over in the UK, we're now pricing, or rate futures now pricing in 100 basis points of cuts, Bank of England cuts for the rest of 2025. That's up 6 pips on what it was on Wednesday, 94 pips. So we're looking at 100, basically 4 cuts for the rest of the year from the Bank of England, pretty much matching what we're pricing for the Fed now as well. Challenger Grey layoffs yesterday came in another whopper. I mean, last month was an absolute gangbusters, 275,000. Another 105,000 just over, potentially getting laid off again. Now, there is some government skew in these numbers coming through to that. They are counted in these reports. But as we mentioned, there are some firms, big firms, cutting large amounts of workers. We heard Intel, we heard UPS, we heard Amazon. That's 40, 50, 60,000 just on those 3 companies. So some layoffs are happening. Whether it's going to start feeding into the wider jobs market, I guess we'll know in a couple of hours. But until then, these layoff numbers are still heavy. But it is to be said, this is intent to lay off. It doesn't mean all those people get laid off. They could apply for other jobs within the same firm, that sort of thing. So, take it with half a pinch of salt. But the trend is most definitely, as you can see from the chart, not looking very good at the moment. Just wait and see if that continues. We got the initial jobless claims out as well, and of course it jumped a little bit, so the market got a little bit. Ooh, it's gone up a bit. Nothing major. It only jumped like 19k or whatever, 18k. Continuing claims just nicking above the 1.9 million mark again. Unless we're seeing initial jobless claims running at 400, 350, 400 plus, unless we're seeing continued jobless claims bolting well up over 2 million, it's still nothing to worry about. And within these numbers, there was some skews from New York, something to do with seasonal counting or some crap over there. So still nothing to worry about, but we shall continue to watch it nonetheless. We got US GDP. Was it US GDP yesterday? No, that was the other day, wasn't it? What were we doing? ISM, that's where I'm at. ISM and the S&P Global Manufacturing numbers out. And manufacturing coming in at 50.2, the final number there for the S&P Global number, lower than the 50.7 expected, matching what happened last month. The ISM numbers coming in, and as you can see there, better than expected, but still down on last month. So not as crappy as it could have been, that old line again. Prices, they were expected to rise quite stiffly, 72.9. They still went up, even though they missed expectations. So still higher than last month. New orders, that ticked up as well. Employment, that ticked up as well. But again, we're still in contraction mode. So no relief for the manufacturing sector among a lot of major countries at the moment, still in a bit of a slump. And this was all happening before Trump came in, so it's not as if you can blame him for all that. The question will be whether it gets worse or not before it starts to get better. We'll have to wait and see. Treasury Secretary Bessent says the tariff situation with China will be a multi-step process. While speaking on Fox News, he says China needs to rebalance. It says if US and China could rebalance together, that would be a big deal. The Chinese economy is slowing down substantially. And we will likely revisit Trump's phase 1 trade deal. That was the thing he put in place the last time he was in. China, though, still sticking to their guns, says the US should show sincerity if it wants trade talks, and China's position is unchanged. The door is always open for talks, although it seems not the phone. I still can't find it. Mixon Prez Sheinbaum says we had very positive conversations with Trump. Agreed that Treasury, Finance, Economy and Commerce Secretaries will continue working in the coming days on options to improve our trade balance, and will work to advance outstanding issues for the benefit of Mexico and the US. So they're continuing to play ball. Europe apparently are ready to make a 50 billion, this is euros, 50 billion offer to the US in trade talks, according to the EU's negotiator, Sefcovic. So they're apparently going to be putting forward some ideas worth 50 billion. We'll see whether Trump takes that up. UK elections, just to touch on it quickly, we mentioned it this week. It was a resounding gain, a lot of gains for the Reform Party, which is this growing third party now in the UK. Both the Conservatives and Labour lost council seats. These are just local council seat elections. They're not MPs. They don't change the makeup of Parliament. They are often used by people to protest vote because nothing really matters for the next 4.5 years until the next general election. But as I say, people can still voice their discontent without it actually impacting anything. But anyway, Reform could possibly be a third party at the next general election if they continue to gain, something to keep an eye on. That's it as far as that goes. Kay, anything else?
That's it.
Good. Short and sweet. That's just how I like it. Right, let's get into today's NFP data. We don't get double bubble Canadian jobs, so we can loony traders will just have to worry about what's happening in the dollar side of things. We're expecting 138k, give or take, depending on who you're looking at. So thereabouts, 138, 140k. So we're already looking on the softer side of things compared to what we got last month. Now I'm just going to show you this because as you can see, the forecasts are often, or have been for the last few months, pretty much on the low side, below 200k, where we've been getting mostly 200k readings. So these, if you took an average, we're probably thereabouts as well, 150-ish. So that's what the market's looking at. So you know, first off, again, a bit like the ADP, if it's a positive number, even 10k, okay, it's not a negative. Okay, so that's the sort of line you want to look for. Yes, it might be bad if it misses 138k, but if it's not a negative, it's still not really bad. Okay, but if we get a negative, then we're potentially heading into really bad. But then you're going to have to look at this government number, because if that's where all the negativity comes in, the market's going to discount that. Okay, so even if we get, say, 10k and government jobs was down 90k or something, or however the makeup is, it's going to, market's going to go, okay, well, we knew about those government jobs, so it's going to brush it off. Okay, if that's flat or a positive in the government number and we get a negative NFP, that's going to potentially signal a problem, and the market's going to be all over that like a rash. So for once, the headline is going to be really important, whereas before it was maybe it is, but the unemployment rate and participation rate are going to be more important. They are still important. So for those who do not know, when you look at the unemployment rate, whether it goes up or down, you have to match it off against the participation rate, whether that's gone up and down. If the participation rate goes down, that can automatically bring unemployment down. Okay, so you need to calculate that as usual. And then pay attention to wages, still up near that 4% mark, so not looking like they're weakening. But if we get a really weak one, 3.6, 3.5 less, again, that's going to show maybe that employers aren't willing to start paying up. Maybe the labour market's getting a little bit looser rather than tighter as it has been. Woof, there's the setup. Okay, your thoughts on the NFP, mate?
Yeah. The headline numbers, yes. Government payrolls, yes. I think we have to look at two other things, and I'm going to quickly talk about something that is not on those free calendars, but that you will have to open the BLS report for it to find the number. But then for me, basically, yes, obviously we're going to look at those government payrolls, how much that they will impact the headline number. The market is expecting now the job market finally to start including some of the cuts that we have seen announced in other reports. So I went just on the bet. Usually go for 111k, which is somewhere in the middle of Bloomberg's expectations, but I decided to drop the two first once. So I've gone for 1k today, just for information. I'm expecting it not to be a good one, or at least betting on the fact it won't be a good one. There's going to be the unemployment rate, which is going to be quite important as well. Only for the fact that the expectations are for it to be somewhere 4.3, 4.1, 4.3. If that would come out like 4.3, 4.4, the market will already perhaps be a bit nervous about the whole thing. And then there's that one number that is not shown on the free calendars, at least, and I'm going to try and keep a close eye on that. It's the total unemployed number. It's something that Powell has been mentioning quite a few times over the past years, in fact. That is looking at the ratio between the job openings and the unemployed, and they have converged pretty close to each other over the past months without going over the negative line, the negative ratio. But it's only going to need like, only an extra 160,000 unemployed to actually break above the JOLTS opening number, which if that would happen with the rest of the report obviously going to be weak, if that happens, then we could see the expectations for rate cuts actually being brought forward, and why not open the door to an immediate one next week? I think if we would see that balance change, then we could see also a change in Powell's rhetoric. So far, he's been very down to earth, walking all sides of the aisle, as we know, putting inflation still at the same level of the rest of the growth employment data. If that balance shifts, then I think we may see also a change in Powell's approach to what is happening, and that is one that I'm going to keep an eye on. Obviously, need to wait for all the publications, the BLS publications, to really get to that number. So machines, algos will have already reacted before I can lay an eye on that number probably. But anyway, this is a tip. For our audience. I've also said it in the sorry, I've also said it in the room that it is one to keep an eye on, and that is one that I'm going to watch out for today, Ryan. You were asking about the Swissy. I think it's a collapse in the, or a collapse. Well, another failure in the US Iran talks.
Oh, that was out ages ago.
Was it?
Yeah, Trump was even yesterday.
Yeah.
Trump
For
was
the
out
rest,
in
look at the
Montrose.
dollar. The dollar is getting hammered.
Yeah, I've just been stopped at me Euro Swiss from
Yeah,
that
the
move.
dollar is getting hammered across the board. I think the market is not wanting to be long any dollars, or even go short dollars into the report, and perhaps already previewing a bad report. So risk is getting sold as well. We see crosses like sterling yen, or the yen crosses are a tad heavier as well, and we see the dollar getting a little bit hammered. I really think it's the market pre-positioning for that jobs report, you know.
Yeah, no, oh well, stopped out of that one. Anyway, let's see what's going on. Just keep an eye on that while we're talking.
Yeah, it
Anyway,
was a very, very swift move all of a sudden.
yeah, that was. I mean, it was trading at 60s a minute ago, and
Yeah,
it's just
yeah, absolutely.
traded down to 90. It's bounced back again, obviously. I don't know if I'm going to add back. I'll just keep an eye on that
Just
while we're talking. Just keep
yeah,
an eye.
trying to look in the headlines if I see anything, mate, and then
Yeah, let's have a quick look at oil, see what's happening in that. That's
no
not doing too
Plaza. Oil
much.
is down.
Down a little bit. Not exactly collapsing.
No, no, I don't see too much either, you know.
Quick look at yields, just to see what's going on there. They're back above 420 now.
Yeah,
Don't know
flat.
what's going on there. Don't know what's going on there. Anyway, we'll keep an eye on that while we're talking and jawboning. Might as well go into dollar yen while we're there as well. That's just while it shits the bed. We got first things first. We got a move, very strong move through the 144, through the 145. Looked like it was motoring on. Got up to pretty close to the 146, and now it's just crept out. So we're back under 144. 145. Yeah, it could be some. The market was a bit long, just even short term, and it's just taking a bit of risk off ahead of the NFP. Might as well take the profits in case it's a wobbly one. Or something else is floating about. I don't know. So for me, you can basically just judge this one on what happens today. We're either going to finish above 145, and that means we're probably going to be going higher, or we're going to finish today below 145, and then it just keeps this bearish trend going. It's not out the woods, and then maybe we get a return down to 142. So if we get a quick move down to this 142 level, I'll be worried that we're going to be smashing it and going on maybe even to newer lows. Yeah, it's on a knife edge, this one at the moment. And, if you don't want to get caught up in the noise of what's happening over NFP, then just wait for the dust to settle and see where we sit after. That will give you clues. What are your thoughts?
I wouldn't like it to really drop so fast to 142 either. I think if this is to continue higher, short yen positions unwound, etc. Long yen positions, sorry, unwound, etc. It should hold well before 142, in my opinion.
Yeah, and Fred's just pointed out. Hello, Fred. We're having a little look at that
Yeah,
64.40 again.
not
So
now.
no, exactly. This is a bit like when we had that break the other time. You don't want it at particular times. You don't want it on fixes. You don't want it on in a month. You don't want it at just 5 minutes before an NFP reading. It's really, I don't know what to do with it here.
Well, that
Honestly,
makes it that more difficult to put orders
yeah,
in. Because
exactly.
we Aussie's got already a more positive vibe with China not closing the door, and US seemingly having contacted them through various channels. Somebody found his or her phone back. So it's already a bit more positive for the Aussie. We continue to bang our head against that 64.40. I would have really hoped we were trading much closer to 64 to figure than 64.40 going over the NFPs, because it was one of my pairs that I was going to really closely watch, or even put a stop through 40, 45, 50 or so to get long again, in case we get a worse number out of the US, but we're already there. That's making things a little more difficult to enter
Yeah.
on the Aussie side.
But then, does that put it on the other side? Would you buy a dip down there if it was a good number?
Um, well, define good, mild, bad. That's going to be the trick. All as always,
Yeah,
It's there's going to be a combination of numbers which are going to be mild and good for, let's say, risk, in which case you would still buy a dip in the Aussie, I would say. Um, that is one that I'm looking at, even for perhaps a dip, or if we get a bit of a stronger dip in the dollar yen, then should be one warranted on a mild negative report. I'm looking at stuff like perhaps Aussie yen or so to get long in. But yeah, if we're trading extremes, and you talk about really bad stuff for risk that drags as well equities as yields as the dollar down, do you really want to step in front of any negative risk play? So in that case, I reckon it's just going to be the dollar getting hammered. Huh?
yeah. No, I think so. I think good news is, firstly, if it isn't bad news, and that's how the market
Yeah,
will see it.
correct.
But what it does with a 250 jobs report, I don't know. We're in a bit of a mood, or have been in a bit of a mood, as we've seen from the likes of dollar yen, where we're looking like we're far more bullish. So yeah, if we get a good number, 200, something like that, decent unemployment rate, wages staying up, no problems whatsoever in the jobs market, I think then we're probably sailing back up to 146, maybe even more. Might even go on to test the 38.2 at some point. But if it's just this isn't crap, then we probably see a bit of a bid, but maybe it won't last too long. Anyway, lots of stuff going on for that one. Where else shall we go? Oh, that Aussie dollar. Pain in the arse, I tell you, pain in the arse. Dollar China's seen that's seen a bit of gaining as well. Again, don't know if it's dollar weakness. It hasn't been doing an awful lot around this 728s for a while. So to suddenly get a move like this, yeah, I don't know. I don't know what's going on here. This is a bit of a level down here. Again, if I'm half tempted to give it a little bit of a look, maybe, but I don't know what's driving this move. So I'm going to maybe be a bit cautious. Plus, I'm on half day today, so I don't want to get out my prime trading stuff, particularly when I want to train when the NFP drops. But anyway, this is a bit of a level down here, 721.5, 22s for China. So keep an eye on that one as well. Right, Kate, going to punch it over to you for a few.
Sure. Let's get to our good old friend, the oil, the gold first, because where I thought there was a chance of going for a visit of that 3165 70 or so. It stopped dead on the 3200, and we are already back up. So I think it's a case of people not believing in the dollar revival, all of a sudden sending it back higher. And despite China being closed, the move has happened overnight again. So when we say the one or the other market is closed, just know that people are still trading, and um, well, I've seen it over my whole career. When a country is closed, financial institutions, asset managers, even banks, they have teams, they still serve clients and stuff. But I think it's more of a dollar thing, this one here, because it should not really have rallied that much on a China US more positive approach for the trade. The trade situation. So I think it's really a dollar move, and people perhaps saying that, okay, this was enough of a retracement. So the number this afternoon is going to be very important, especially I would say if we get a disaster number coming out, in which case if that breaks back above 3300, we're probably going to go fairly quickly back up to the high 33s. On the downside, yeah, this 33 and a quarter, but just watch 3200. If that goes over the course of the day, then I think there is a good case for it, for this to go at least test the 31 and a half, also 3165, and that's the zone where I'm going to get interested again if we see it down there. I still think the whole situation and the whole longer term moving gold, I'm still leaning towards the fact it's not over. But as I said, I was taking into account a potential situation like this. Um, I may or may not trade this afternoon, but I really think that if it goes back down to 3200 and hold, I'm not going to hold to hold off for much longer. Have you looked at euro dollar? I don't recall, Ryan.
Nope.
No, okay. Easy. Well, straightforward, I would say. Expectations are high in the market, so we should expect moves. And then you measure that versus the expectation in the options market, who are not expecting those big moves. So what do? We watch the extremes of the ranges: 114, 114 and a quarter, 112 and a half, 112.70. Break of either side. Well, first of all, a hold of either side, and you're going to continue to trade the range, and we are back to trade negotiations. Okay, a break on either side, I think, is going to be relatively important. My preferred side, or let's say the side for my global bias, is still for it to go for a break and trade higher. On a bad report, I think 114 and a quarter could be toast, and we're back into the 115s relatively quickly. Now, we always have to prepare for any side of the markets. That is what we traders do. In case this report again defies all the laws of gravity, we could see finally that break of 112.70, and then you look at what's happening for confirmation around 112 and a half and 112.20. If really it would go, I think we are probably going to trade closer to 111. Why not even 110 and a half before the whole thing is over? Or we have to rethink. Okay. So my first impression is that today we break either side of this. My bias is that we, even if we get down there and then we hold, we could actually see it move back higher. So remember what I told you to have that extra eye on those data for the unemployed situation. Okay. Um, Next, cable. I don't know if I'm overthinking this, but I'm just that tad less optimistic on sterling as such right now after those local elections. I know I'm perhaps overthinking it, but matter of fact, we have to watch a couple of levels here. First of all, your 132.60, then obviously the 132 figure 10 is going to be your big support, and your 133.55.60 is the gateway to get back up towards that 134.5 and a bit. Okay, taking all those considerations about those local elections out, if you trade pure dollars, there as well, over the past, we have been holding all the retracements. Okay, it's not testing the big retracement levels yet. Euro dollar, we could argue the same, the 112.2070. We haven't really gone and tested the underside of it. The underside here would be clearly 132, and then 133.60 is your nearest one on the top side. If that goes, I think we are going to be relatively quickly back into the 134s. Ryan covered the Aussie. If the Aussie goes, it's really we're talking about 64.80 and then up into the 65s. If we break and hold this 64.40. Kiwi, just a quick one. Look, it looks to be flagging, or if it takes too long, having the looks of a windsock, rather. Relatively straightforward levels: 58.85, 80, and 59.5. Okay, but same here. The major levels have not really been retested yet. Okay, main levels being 58.5, stretch it to 58.2025, and on the top side, if it would break, we have like small resistances here, prior tops in between, but the big break level is still only up at this 60.30.40 in the Kiwi. Okay, so again, I think it's gonna move, but the amplitude of the moves um, will be directed by the amplitude of the beat or the miss of this report. And again, take it as a whole report. Don't look at just one single number. Okay, like Ryan and I have been already telling you so many times. I was long sterling yen today. I took the profit. Just again, I may be overthinking it, but just because I didn't know exactly what was going to happen ahead of the NFPs, and also being a little less positive myself on the sterling as such. I changed my focus point to Aussie yen, because get a really good report this afternoon. This Aussie yen may go for a walk. That is what I think. Get a mild one with a bit of dollar selling, dollar yen coming down a bit, and we get a little bit of a retracement here. I think levels around 92.20, 91.80 are going to be very interesting to monitor on the Aussie yen for a hold on a potential hold on a setback. Get a really mild report. I think 93.80, 90 maybe toast, and we are going for a walk. Perhaps higher. That also taking into account not only that the Aussie is a bit stronger, but also what I've been telling, positioning in yen was relatively strongly long yen going into the Bank of Japan yesterday. The fight that Japan is putting up against the US on the trade. Okay, it all could help to see the yen weaken again, in case we get now on top a mild risk positive jobs report this afternoon. Guys, anything else that you were talking about? I don't think so. The dollar yen, yeah, Ryan already spoke about it. You look at the wider levels, but there, if you really would get like a very strong report, a retest of this channel is not to be ruled out. We're talking about mid 147s in the dollar yen there. Euro Aussie Donna, Euro Aussie let me get, because I put it on a really short time frame. I don't know why. I think it was, oh yeah, because somebody said there was a nasty, really short-term candle somewhere. I haven't seen it. We are in the zone. We are in the zone 175.90 down to 175.70 should hold, or this may mean more downside. I think Aussie moves faster on risk than Euro, for instance. They both could kind of move similar ways on risk, and that's going to be probably the decider this afternoon on a pair like this, for instance. But really, it should hold. It should hold 175.79, 176 the figure, or we could really see a test to lower levels, and then I'm talking about 174. Maybe back down even to 171s if risk is really positive, and if the Aussie is taking it as positive, and it's and the Aussie will go for a flyer. Okay. Shorter term 177, then 177.5. Those are the top side levels that you should be looking at. If we get back above there, we could be back on our way up into the 178s. But the way this trades here for now, there is a risk on a positive number that we go for a little bit lower, but okay, just because we are hanging there, all right. And usually when something hangs around a certain level, coming from higher, it's still not looking really good unless we see a bit of a change in the situation. Dollar mix, I'm giving it over to Ryan because he's got a clearer view on that. I think for me there is nothing really. Well, I'm just a tiny in position, but there's no real big levels of before 1980, 1990. And on the downside, we need to get back below 19 and a half, and then it's going to continue. It does look like the situation Mexico, US is at least not getting worse, but you don't know what's going to happen on risk, and Mexico can react on a risk play as well. So if we get a really disastrous report this afternoon, I would suspect Mexican peso to actually follow the leader and perhaps weaken at that. Globally speaking, then at least this is how I look at it. Ryan, if you have another view, go ahead. I'm done.
Lovely. Thank you very much, mate. I'll just grab it quickly for the old dollar
Oh,
megs.
maybe oil or so, but
Yeah, can have a look at that
yeah.
quickly. Yeah, here's my view on dollar megs. Same as Kay. We had these two break points underneath 1990, so they need to be considered on any bounces back up. But otherwise, 1990 is your main level. We've got these few little bits and bobs going on down below here. We've been punching around these levels. I've mentioned 1950, 52. That seems to be the new support level. We can't get through and hold underneath it. It seems we're either trading 60s or 50s for the last few days, but we now have just a little look up towards some of these little prior highs that we've had. 70s, 75. Again, this was a break point. We came back to it, but this is all just, apart from this 1960, this is all short-term small stuff. But unless we're getting above there or going below there, this can just wander around as it sees fit. Right, just looking at the clock, I think we'll call it a day for today, a week for the week. Hope you've all had a good week. Thank you, as always, for coming and following us here at the Flow Show. Thank you, Kay, as always, for all your stuff. I will see you on Monday, but everyone else, you can go and have another chat with Kay on Face a bit later when they cover the NFP. Trade safe for the rest of the day, folks.
Yeah, have a good trip to London, Ryan. Have fun, mate.
Thanks, mate. And don't forget, it's Bank Holiday Monday here in the UK, so no Flow Show on Monday. And as for the competition, I'll do the results sometime over the weekend or maybe Monday. Anyway, that's that. Have a good weekend, everyone.